I told you, the countdown is winding down and we are less than a month away from what might be the most eagerly anticipated Federal Reserve policy meeting in quite a while. Will rates finally go down? Let's take a look at what's happening this week to get any indication of where we might be heading. Before we begin, remember to like this video and subscribe for more economic updates. We know that inflation is one of the most watched numbers to gauge where interest rates are heading. And on Friday, the Commerce Department releases the Personal Consumption Expenditures Price Index for July. The PCE Price Index is projected to come in at 2.6% year over year, a tenth of a point lower than in June. Annual Core PCE, which excludes food and energy prices, also is forecast to have landed a tenth of a point lower last month, coming in at 2.7%. A drop in PCE by any amount is likely to further cement the already widespread expectations that the central bank will start reducing interest rates next month. New orders for durable goods are expected to have made a big turnaround last month, rising 6.8% after startling economists by tanking 6.6% in June to $264.5 billion. That's their lowest level since November 2021. A couple of real estate measures are due to be released this week, including the Pending Home Sales Index for July from the National Association of Realtors. The index, considered a leading indicator of housing activity because it measures change in the number of homes under contract, is expected to have climbed 1.3% last month. That would follow a near 5% gain in June. We'll hear again from the Commerce Department this week when it releases its second estimate for GDP growth in the second quarter. The consensus estimate says GDP grew at a pace of 2.8% last quarter, which would match the first estimate revealed toward the end of July. Although estimates for GDP growth in Q2 are running at 2 times the rate of GDP growth in the first quarter, economists are expecting economic output to drop significantly this quarter and next. Right now, the Conference Board is projecting GDP growth in the third quarter to land at an annual rate of just 0.6 of a point, and Q4 GDP growth to come in at 1%. And speaking of the Conference Board, it will check in on Tuesday to release its Consumer Confidence Index for August. Economists expect to see the index drop to a reading of 100 this month. The Expectations Index, which is a component measure of the broader index, may get even more attention than the overall measure this month. The Expectations Index gauges consumers' outlook for the economy 6 months down the road. A reading below 80 is considered to signal the recession is ahead. And in July, the Expectations Index came in below 80 for the 6th straight month. That's it for now, but make sure to join us on Saturday because the numbers we see from this week might give us some real indications of where interest rates are heading. This is Devlin Steele for Augusta Precious Metals signing out.